A war that has held the global economy hostage for over 3 months may be ending this weekend. Friday, June 12, 2026. Like and subscribe for daily market updates. Today's agenda: the market explosion, market snapshot prices, central bank moves, the peace deal news, gold and crypto update, IPO and earnings watch. But before we dive into the big geopolitical story, let's look at where major asset classes stand right now. Let's start with what the numbers are telling you right now. Yesterday was one of the most explosive single-day rallies in all of history for this year so far. The Dow Jones exploded nearly 930 points, surging 0.86% back above 50,000 to close at 50,849. That is a massive move that usually takes weeks or months to happen over multiple days, but it happened in one single session. The S&P 500 ripped 0.75% to just under $7,400, and the Nasdaq jumped 2.54% in its best session in several weeks. Even better, the Russell 2000, which is often called the small cap index that usually leads when risk appetite truly returns, blasted over 3% higher. The VIX fear gauge collapsed nearly 12% in a single session. The market went from paralyzed to euphoric very quickly. So why did prices move so fast if inflation is still high? The answer lies in what central banks are doing next. Here is the full picture of where things stand this morning. The U.S. 10-year Treasury yield remains elevated, hovering in the 4.5 to 4.6% range. This acts as a warning sign that bond markets are not convinced inflation is beaten yet. The U.S. dollar index sits near $99, which indicates a weak dollar right now. When we look at currencies against greenbacks, EUR/USD trades around 1.15, and the pound stands at 1.33. A weak dollar normally acts as rocket fuel for commodities like oil and gold because they are already expected by the market dollars. However, that is not happening today. The market has a different obsession right now with peace deals instead of currency strength. Now let's talk about the most important story driving everything else right now in global politics. Here is the uncomfortable truth behind Thursday's euphoria. The macro data is alarming and scary for investors. U.S. Consumer Price Index for May came in at 4.2% year-over-year, which is the highest reading since April 2023. Annual Headline Producer Price Index hit 6.5%, marking the fastest wholesale inflation in nearly 4 years. The rally happened not because the economy got better or stronger. It happened simply because a war might end soon. The Federal Reserve is holding its benchmark rate steady at 3.50 to 3.75% right now. Goldman Sachs has already pulled all 2026 rate cuts from its forecast completely. But we must be careful not to celebrate too early before the final agreement is actually signed on paper. Now we get to the story that is driving everything else in this market today. On Thursday evening, President Trump stood down from planned military strikes against Iran and made an extraordinary statement. A peace deal could be signed as early as this weekend, likely in Europe. The terms reported would include reopening of the Strait of Hormuz and Iranian commitments to halt nuclear weapons development completely. Iran's semi-official Fars news agency reported that Tehran was likely to accept these new offers quickly. No final text has been signed yet or confirmed officially by anyone, but for a market living in fear of oil hitting $120 per barrel, even the word likely was enough. Now let's look at the corporate side of things, with 2 major companies making headlines today. Let's look at how precious metals and digital currencies are reacting to these events. Gold is trading near $4,193 per ounce right now. It bounced over 3% on Thursday alongside the peace deal euphoria, but remains down more than 10% over the past month overall. That January peak was crushed in a single day when Trump nominated Kevin Warsh as Fed chair, and markets repriced expectations immediately. Right now, gold is caught between 2 worlds, structurally positive because of inflation and central bank buying, yet negative on rates that look in favor of higher rates again. Finally, let's wrap up with the key risks and opportunities facing you as an investor this weekend. 2 major corporate stories that every tech and growth investor needs to know right now. First, Adobe reported record Q2 revenue of $6.62 billion last night, which was up 13% year-over-year, beating estimates on both revenue and earnings per share completely. The company raised its full-year company outlook as well by any fundamental measure, a strong quarter indeed. And yet the stock fell over 5% in after-hours trading anyway. The market rallied nearly 900 points yesterday, not because inflation is under control or earnings were perfect. It happened simply because one man said the word deal regarding a peace agreement with Iran. This means the ice beneath this rally is very thin and fragile right now.